All right, guys, we are back after a week off. Sorry we missed last week, but we are back in action. The Deep End, episode 7. I really missed this last week, and it's good to be back in the saddle with you guys, and Ari with you as well. Um, I just had I want to open it up with a quick question to Ari. So, I think it was yesterday, you posted a Masters of the Market video, and as I was watching it, I was going through some of the comments, and some of the comments on that one were kind of interesting, just pertaining to the guest that you had. Not, I don't know if they were necessarily positive or negative, but and you'll know I know that you'll know the comments I'm talking about. I guess I just wanted to ask though, when you see that type of stuff, where does your mind go? Like, how do you internally, how do you react to those comments, and what do you make of all of that stuff? And I guess how do you use that in, I guess, planning future episodes when it comes to the guests that you have for that? I'm always curious about how you go about choosing guests, and seeing that type of response from this last one, which is a total departure from a lot of the comments you usually get on Masters. So yeah, I was just wondering how you think about all that stuff.
Yes, it's an interesting question. First of all, in terms of guests, I am always welcome to have anybody join me on Masters of the Market as long as they have a story of some sort, and they're able to actually share their story authentically, and they've seen success in the stock market. So if anybody out there has a good story, has become the dividend millionaire or something of the alike, definitely reach out. But every guest at first was actually chosen by me reaching out to them. And rather recently, I've had a lot of people, very fortunately, actually just reach out to me and share their story. Of course, I do some back checking on who they are and if they're actually legitimate, to make sure that if you have a dividend millionaire, they're actually a dividend millionaire. Now, the last guest, just to fill everybody in, was a former hedge fund manager, and currently he is the chief investment strategist over at Manward Press. His name was Shah Gilani. So this is a very, very talented individual and someone who had decades worth of experience in the stock market. So I was able to get in touch with Shah actually because of Masters of the Market and just kind of networking with a lot of people on Wall Street. And he was an amazing guy. I mean, off camera, just an amazing guy, very insightful, informative, and somebody that really, I don't drink these days, but if I did drink and I wanted to grab a beer with someone, Shah would definitely be someone that I'd love to sit with and just, talk the market with. This was his second time on Masters. The first time we did like the legit, 1 hour full episode with Shah and who he is and his outlook on investing. Now, this, I guess you could say like half Masters chat that we did was really to inform and update everybody on kind of what's going on as we kick off 2025, which I'm sure I don't need to tell anybody, but there's been a hiccup there in the market when it comes to AI, especially with news, DeepSeek news out of China, and it just sent the tech sector, falling. Now, Shaw and I filmed Masters of the Market, days previously. So when he spoke, I actually posted the video, and then of course DeepSeek comes out and everything happened. So the tech sector was in the red, and Shaw was kind of saying that tech is going to have this, big run up in 2025, and he's all in on tech, and he loves tech. And so some of the comments, Ryne, you saw and I saw were really about people saying like, oh, this guy's just all in on tech, and it's not even a great investment. Like, look where it is now, which I have to say, don't be short-sighted because investing, as everybody knows, is about the long game. But then there were a few comments that took me by surprise as well, which were more along the lines of, commentary on Shaw's link that he had in the description and pin comment, which Shaw wanted to talk about essentially Charlie Munger's last stock pick. And then he made his own, video and everything of that sort that you had to click through and go to his site. And people were just, some of the comments that were left were just like, wow, like, what a slick salesman. And what a waste of time to even, watch this guy only for him to sell something. And I mean, I'm just going to say it point blank. There's like a good chunk of a half hour worth of solid insight and information that you can get from Shaw, and you don't even have to click on that link. And then when you click on that link, should you choose to click on his link, like then you're dealing with just Shaw. But it took me by surprise because I think as investors, if you're classifying yourself as an investor, you need to be a sponge. And if you have someone who worked on Wall Street for decades, this is like how my mind operates. He has something to teach me. Could he be selling something? That's fine. That's the name of the game. That's the business. But did I get value from something that he shared with me pre-sale, right? Like no sale. And so I was a little taken back by some of the comments. I don't really care, to be honest, with a lot of the comments that come in and like put other people down, because you're going to get hate. And at the end of the day, I know Shaw at this point, like personally. And like I said, he's a great guy, very, very insightful, and knows what he's doing. He's been a heck of a fund manager and has overseen, I mean, multitudes of millions of dollars. Billions, right? Like this is a guy who just he knows. He's been in the game for so long. So I just say,
Peanut, come on.
there, Peanut is.
Sorry, man.
All good. I just say, like, respect someone's hustle in the industry. If they're trying to sell you something, be aware of that. You don't have to buy it, but did they teach you something? And look for the golden nuggets. And even if they are selling you something, here's the other kicker, is if they've been successful in what they've done, it's not always a bad idea to understand what they're selling. Doesn't mean you have to buy it. But that's kind of my take on everything. And again, Masters of the Market was created just to get investors in front of other investors. The Masters in front of the average Joes, but the Masters very well could be the average Joes. Even Shaw's story, by the way, from his come up, like, yeah, you just got to know like who you're listening to, and everybody's selling something at some point or another. So take what you can get from them, put value their time for what they're giving you for free, and I guess. I can wrap up that thought with that. I know I said a lot, but hope that answers some of the questions.
Yeah, with that said too, I mean, the broad strokes of all of that, I think, is keep an open mind, and you have to take the good with the bad. With that said, so from I know this is your second time talking to Shaw on camera. What was your main takeaway from this most recent conversation?
2025 and a presidency. By the way, Shaw's not the only professional I'm speaking to off camera. I really do have such an amazing privilege because of Masters of the Market building, and just because of the work that I do off of YouTube to connect with a lot of these, big shots, I want to say, on Wall Street. It's fascinating to be connected with a lot of them, but they all have actually a very, very similar message to Shaw off camera, which is interesting. And put your politics aside, a Trump presidency means a presidency that is focused on big business. I don't care about anybody's politics. It just comes down to what is a president that is connected to big business and doing more for big business going to do for investors, because that's the name of the game that we're in. Everybody on Wall Street that I've talked to and that I'm connected with and that I am speaking with, either weekly or sometimes daily, this is all we're talking about. What does it mean to have a president who's so, driven when it comes to big business and helping big business? And what is that going to do for the tech sector specifically, especially with AI and quantum computing. That's what Shaw was talking about, the kind of the Mag 7 picks and where he would be investing his money. I think we are really going to have a tremendous year for anybody who's investing in tech, and we're moving into the future. We're only moving into this direction. Something else that's interesting, I think, from some of these guys, Shaw even alluded to it, because I asked him straight out, do dividend investors have to be worried? And he said, no, a matter of fact, just the opposite, because you always want to have the balanced portfolio. So he did give both kind of frameworks. It's like, no, don't be foolish. Like, keep focused on value. Also know yourself where you are as an investor, but like be aware of tech. So that begs the question I want to pass back to you, Ryne. What's your take on DeepSeek, on NVIDIA? I'm going to admit something to you right now, Ryne. Dropping it for everybody out there. I bought NVIDIA just the other day on the dip. And it will be a swing investment, a swing trade for myself. I don't want to stay in it long. That's not a long-term investment for me, but I did buy it and I see opportunity. So I'm taking some good old Warren Buffett advice to jump in on the opportunity, striking while the iron's hot. But what's your take? I mean, there's a lot of news that just came out. AI, quantum, DeepSeek, NVIDIA, like, could we see a potential Ryne Williams buy-in on tech?
Probably at this point, not beyond like what I already have through exposure to the S&P 500. To me, that's still sufficient for me. And truth be told, I don't know that I fully understand all the implications of this DeepSeek thing as it pertains to like Google and Amazon and Meta and some of these other tech companies. I'm not quite sure I understand the full implications there, which I'd love to learn about them if you're informed on it, because I do think it is important to know. I just haven't had the chance to really sift through all of that stuff. I will say though, one of the key points I remember hearing about this DeepSeek thing was they were able to create like the same amount of computing power or AI power or whatever at like a fraction of the cost. Like it was like $7 million versus billions and billions here in the States. I'm a little bit skeptical about that. That just seems so, and I don't know a whole lot about that stuff, but that just seems so crazy to me, a bit maybe unrealistic, and it's almost too far, it's almost too cheap to believe. And maybe I'm just skeptical, but I don't know. I'd be curious to know a bit more about that, because that almost just seems too good to be true. That's my only serious thought on the matter at this time. It does seem like a lot of the tech stocks, though, have kind of started to make their way back up from the news, and which is always how it goes. Like the initial reaction is always so much greater than where the dust actually settles. So as it pertains to you swing trading into NVIDIA, yeah, I could see that being a good move. And I guess with that said, what's your number one, what's your plan with that one? And number two, if there's any, like, if you could fill in the gaps at all for me on the implications for all these tech stocks, I'd be curious to know.
Yeah, so the NVIDIA, plan, like I said, it's 99% a swing. And I wanted to jump in there because, again, off YouTube, I'm doing work within the financial, industry and just the connections and talking to people and understanding it on a little bit more of a deeper level. I wasn't such a big NVIDIA guy, even focused on NVIDIA, especially at the share prices that it was soaring to. But when this all came about, and there is a lot of skepticism, by the way, still within the financial community, definitely on Wall Street, about DeepSeek, and is it really, news that is I want to say truthful. I don't 100%. No one that I've spoken to 100% knows if it's reliable. There's a lot of speculation that it's certainly not as reliable as the NVIDIA software and technologies. I think more will be revealed, but in my mind, especially as I talk to a lot of people, what I kind of take the situation as is, first of all, competition is good. Competition is great. You don't want an all-in-one NVIDIA, this is the end-all be-all stock.
Yeah,
So
I
I'm
agree.
all for the competition. That will, by default, lower the price and share prices so we have more players in the game. However, the way I personally think about it is like a Tesla situation where you had Elon Musk come out and he was top dog and still is top dog when it comes to EVs. And yes, you do have other EV companies, especially out of China, that became competitors. But Tesla and Elon Musk still lead that charge. So, do we have and will we have more efforts being made when it comes to quantum computing and AI? Of course we will. And that's healthy. Very, very healthy. Now, the thing that NVIDIA has over a lot of these other companies is the bandwidth, the manpower, and the technologies that have already been, I'm going to say brewing now for years. And so where is DeepSeek really on their timeline of kind of technological advancements with AI and quantum computing? Again, that's questionable. Why? Because, again, anything out of China sometimes is questionable. And that's just how I look at it. But there's going to be competition. I stick with the top dogs, just like a Tesla, just like a Microsoft, just like an Apple, right? People are even scared with Apple sales dropping in China. But these are your top dogs. So that's kind of my framework around it. And when it comes to the move that I think I'll be making, I want to I'll probably watch NVIDIA in the next, I want to say month or two. Again, I'm not going to predict what exactly is going to happen, but I can imagine that within the month, 2 months maybe, we'll get right back to the share price before the DeepSeek news, if not even higher, because the noise will dissipate and we're going to realize that, oh, wait, NVIDIA is still NVIDIA and it's a great company. And so people will run back to invest into it, and the stock is already, working its way back up. So the way I look at it is, because my portfolio now these days is less than 10 holdings. I had capital on the sidelines. And ironically, this is actually something off screen I spoke to Shaw about. I had throughout 2024, I had that lump sum of cash that you probably remember, Ryne, like $20,000, $25,000, all just sitting there. Now, running the numbers on all of that, like if I just threw that all into the market January 1, 2024 and just did nothing with it because I didn't do anything with it anyways, like I would have made the S&P soared by 22.5%. So I took about $3,000, $3.5 that I had just sidelines right now, and I put it into NVIDIA. And that for me is going to be a little bit of the gamble, if you will. I don't do it that often because I very much am strategical with how I'm investing. And what am I looking at right now? I'm just pulling up Vanguard so I get the real number for everybody. But what's amazing is the fact, of course, it's not loading right now. What's amazing is the fact that my account is just soaring with the strategy that I have in place. And I'm just really, really happy with where I'm at in my brokerage account right now. I'm at
Where are you at?
$250,000 in there.
Nice, man.
I just added another lump sum of cash, but again, this is all just building. And
so you're up about 15. No, wait. Yeah, you're up about 15K since the start of the year then, right?
yeah.
Okay.
Ryan, my goal was 300,000 by the end of the year. I mean, that should I be revising that?
Well, I don't know. We still got a lot of year left. We need to see what happens, but I'd say that if things continue at this pace, then that you'll have no trouble hitting that goal. So good stuff, man. That's awesome.
What about you? Tell me about you. Give me the Ryne Williams update. What have you been buying?
Well, I'm proud to say that we are officially across the 90K mark in the portfolio, which is so awesome. I think right now I'm just cracked $92,000. So, man, I'm pretty stoked. I'm trying to stay kind of tempered, mild-mannered about it because, like I said, we have a lot of year left, and you know things could change on a dime. So, but yeah, I'm just grateful to continue. I'm just grateful to be making progress in the portfolio. I hope it continues. And still, like even when the portfolio value is going up, I'm still, have a few things that I'm happy to buy at what I think is a fine price in my portfolio. So I feel like I'm kind of getting the best of both worlds right now. Sometimes when there's too much green and everything's going up, it's nice to be making money, but it does remove some buying opportunities, or it seemingly removes some buying opportunities. But like I said, there's still a couple of stocks that I'm happy to buy at their current prices. So I think I'm in a good position right now, really, really benefiting from both sides of that.
I was going to say, there's no time that I like when stocks are in the green. Yeah, unless I'm retired and need the capital. Otherwise, I want all of my stocks in the red, and I want to keep on buying.
Yeah.
I always say that my biggest regrets are just not buying more of what I already bought and the moves that I've made. And just looking at how we're advancing into the future and where we're heading. I'm just excited. I'm really excited. And I want these stocks I wish the tech sector fell even harder the other day.
Yeah. Yeah, I get you, man. It's something I've been thinking about more lately, because I generally feel the same way and talk about this all the time, where it's obviously good when share prices go down because you can buy these great companies for, less money, and your investment dollars can stretch farther. And that's all well and good. And I was thinking about this more lately because I just recently went through Warren Buffett's 1992 shareholder letter. He was talking about it in there. I'm rereading Richer, Wiser, Happier right now. And there's a section where Joel Greenblatt kind of talks about this as well. But, while it's good to see all that happening in the short term, it's good to see that, share prices go down and have these buying opportunities. At a certain point with the stocks that you own, and I think this can get lost on dividend investors because we focus too much on share prices going down. But it is important from a long-term perspective to see share prices going up. You should still buy stocks with the want to have them go up in value, because that's only indicative of the businesses continuing to grow. And at the end of the day, that's the most important thing. You want to be investing in good businesses. If they're growing financially, if their earnings are growing and their free cash flow is growing and their revenues growing as well, that should lead to share price growth in the future, it's good from that perspective. And that also will trickle into the dividend and lead to more dividend growth as well. So I do think that those things are important. And you kind of have to balance that out in your mind, I think, as an investor, like being happy and being excited when share prices do go down, but also being realistic and knowing that if something hasn't moved for multiple years. I've got a couple of those in my portfolio right now. If something hasn't moved for multiple years, then you need to look into why that is and really assess whether those positions are worth holding on to. And in my portfolio, the ones that I'm looking at where that's the case right now there's two of them. Actually, there's three of them. Nah, there's two of them. Johnson & Johnson's one of them, and I'll touch on both of these.
That's my baby.
This one
still.
and the other one. Johnson & Johnson and WP Carey are the two where I look at my portfolio and I think that's the case. Now with that, you have to look at these positions and come to understand this is true in the short term and in the long term. Why have they gone down, or why are they not going up over an extended period of time, especially if the business is growing? In the case of Johnson & Johnson, I would be more concerned if they didn't have this big litigation hanging over them. I think that's been a huge anchor on the stock share price, and I think that's a big reason why the share price hasn't moved in a number of years, because that's weighing on them so much. When I look at the business fundamentally and financially, it's still doing what it's always done, just being a steady grower. And so for that reason, I look at that and think, even though the share price isn't yet going up, I do think in time it will, once some of this litigation uncertainty has been resolved and there is more clarity there. So in the meantime, I'm kind of looking at it as being this like slingshot that's continuing to be pulled back. And at a certain point, when that litigation lifts, that slingshot will be let go. And I think we'll see the share price react accordingly. And so for that reason, I'm okay holding on to it and actually buying into it because I'm just looking at it from that point of view. That's in contrast to something like WP Carey, where I'm looking at the business and, they've had to take, I don't even know if I want to say take steps backwards, but they spun off their, all of their office properties or sold off all of their office assets. That resulted in cutting the dividend, or right sizing the dividend, whatever you want to call it. And I'm kind of looking at the financials and I think, they're growing, I guess, but like very, 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 very slowly. Very, very, very slowly. And so I'm looking at that one particularly right now and I'm thinking and I'm about break even with that position, but I'm looking at it thinking it's getting close to time to be it's getting close to being time, I think, to letting that one go and reinvesting elsewhere. See if I can unlock, and it's been a fine cash flower, like I'm generating steady dividends from it. Fine continuing to do that, but I think that at this point I'll have better opportunities investing elsewhere. So I might sell out of that position here pretty soon. Because it's just been a laggard for so long. And kind of going back to this original point, how Warren Buffett wrote about it in the letter, and I'm going to paraphrase here because I'm not going to quite get it right, but he makes the comparison to like Alice in Wonderland, saying that, even Alice, when she was in Wonderland, at some point, even though the queen is saying tea tomorrow, Alice says to the queen, at some point it must come to tea today. So, it's good to have a long-term perspective with your holdings. You certainly should, but you should also have the objectivity to be able to look at them after a number of years and say something's not working here. And once you diagnose what that is, I think that will help you decide the best course of action moving forward. Sorry for the tangent. I don't even know how I got on that tangent, but it's something I've been thinking about lately as it pertains to my portfolio.
Yeah, those were the exact thoughts that got me to what happened for me, like why I pivoted into kind of my 180, because I started doing a lot of that evaluating and asking deep questions like, why am I invested in this stock, and is it performing to the performance level that I needed to for my, as I always say, investor profile? And a lot of them weren't. So, and again, I sat for quite a bit of time. I literally remember sitting in the dog park looking at my phone. I texted you, actually. I WhatsApp, voice noted you. And I'm like, man, I think I'm going to sell J&J, And it took me a bit of time to come around to actually doing it because, and this is actually the question I wanted to ask you now as you're feeling this way about some of the stocks in your portfolio. It took me a moment because, okay, one, I had like the kind of loyalty ties to the J&Js and the McDonald's and some of the stocks that I had in the portfolio. Then I started taking on heat because I was getting rid of some of these dividend payers. But more than that, I'm an investor. So I'm not just here like willy-nilly throwing money into whatever because of whatever. Like before I even pull the buy trigger, I'm doing a deep dive. I'm making sure I understand a company. I am asking myself even the question of what I want to serve on the board. What I want to stake in this company. Am I interested in the technologies? Am I interested in the product? Or whatever. There's a whole slew of things that I come to and I sit down with myself to review. But one of the factors, especially being on YouTube, is sharing your portfolio and then having to come back on screen and say to fellow investors, not that I have led you down a wrong path, but I've changed my mind, or the situation has changed, right? Like something happened, and take two, now you're second guessing one of the holdings. And that, especially J&J had me in the same boat you're sitting in now, because it's a phenomenal company. It's got a clean balance sheet. Yes, they have, I feel like their litigation has been going on forever.
Yeah.
They just can't get out of that spotlight. But should all the litigation headlines go away, and should they just myopically focus on pharmaceuticals and med tech. Med tech, by the way, is just going to be continuously, and pharmaceuticals. They're both the two segments that they have that are necessities for the future. So regardless, it's performing over the long term, but in the short term, is it performing where you need it to? And then you don't want to sell it because maybe you feel that you've misled investors. Like, do you kind of get that feeling sometimes?
Totally understand that feeling. I will say, I totally understand that feeling, and it's a bittersweet thing from a creator standpoint. Someone who puts themselves out there in the way that we do. It's good. It's good in the sense that it keeps us honest, I think, and it really makes us want to understand our position and how we feel about certain things, because we have to talk about it and we're putting it out there into the ether permanently. So I think it's good from that perspective, but it can also be bad if we turn out to be wrong about certain things, or if we do change our minds, because people, and we've talked about this before, I'm sure we'll talk about it 100 more times in these conversations, but yeah, people follow you into certain investments. I still don't understand why people do this with me, but there are some people who have bought stocks just because they've seen me talk about them in a YouTube video, and I will always speak out against that and double down on the cliche, you got to do your own research, but it's so true. Don't do things just because we do them, guys, or just because we talk about them. There's so much more that goes into it. You have to form your own opinions. And really, these videos are just us sharing ours, which could be very wrong. So yeah, on the downside of that, people can, if you end up being wrong about something, some people who follow you into it can lose money, and can also feel misled because of that. Yeah, and it sucks. And that, unfortunately, just comes with the territory. And I don't think that we can ever really eliminate that. All we can do is just consistently remind people that we're just average people. We're just sharing our opinions, our portfolios. You need to, these are fine. These videos are fine places to get ideas, but you need to definitely do your own research. And at the end of the day, you also, with that said, need to take accountability for your own portfolio. If Ari and I are talking about a certain stock or an ETF, at the end of the day, we're not the ones that are logging into your account and pushing the buy button in your portfolios. You guys are doing that. So universal you, I'm not talking to you watching right now, although it is true. And so accountability needs to be taken in our own portfolios. And I do think that's, if we do come out and say we changed our minds and, we were wrong, that is us trying to do that for ourselves, trying to take accountability for the fact that we weren't thinking about things a certain way, or certain events transpired in a way that we didn't anticipate. And sometimes that's just how it goes. Like, there's a certain amount of luck that does go into all of this stuff. The future is so unknowable, and all we have is the information in the present, in the past, in the present and from the past. And we're just using our best judgment. And we can have the process dialed in. We could do all the right steps when it comes to researching these companies, buy with a margin of safety, do all the things that we're supposed to do, and it could still turn out, like, the outcome could still turn out unfavorable. Sometimes that is just the luck of the draw. And so I think that's an important thing to remember as well. When it comes to Johnson & Johnson, though, I still think I feel a bit differently than you do about it. The future direction of the company could change things for me, but at this point in time, I'm still giving them the benefit of the doubt because of the litigation, which has to be resolved at some point or another. And I do think once that happens, I think we'll see a lot nicer things coming from the share price. So I'm giving them the benefit of the doubt for that reason. And also, like, I still see the business growing. Like, I'm listening to the earnings calls. I'm looking at the numbers quarter over quarter and year over year, not just in like one particular area of their business, but in both segments, the pharmaceuticals and the med tech. The company is still continuing to grow, and some of these segments and some of these drugs are still growing at double-digit percentages year over year. And so I can't help but look at that and think this is still a fine business to hold on to. It's like an old stalwart, but it's still kicking, man. It's still taking steps forward. And so for that reason, and the balance sheet still is pristine. So for all of those reasons, I'm still okay holding on to it. And I just don't know that I feel the same about WP Carey anymore. I think that it's totally different in my mind. I think with WP Carey, I feel more like how you feel with Johnson and Johnson.
Look, I think to your point, as you were mentioning before, when people follow creators, whether it's us or anybody else, into a position, I'll even go out on a limb here and say this applies to Jim Cramer too. Guy is a creator in his own right, out there on the screen, just like saying whatever. But you have a responsibility as an investor to know the holdings in your own portfolio. It is your portfolio. These are now your holdings. And if you get an idea or the spark of excitement to invest into an opportunity and it doesn't pan out well, something I always think about is, I don't know why Ryne invested in J&J or WP Carey or any of the positions in your portfolio until you tell me. And then when you tell me, now I have an idea of why, but then I don't know when you're actually going to sell out. And I don't know what the future is going to hold. And I don't know really anything other than why you bought it in the first place. But there could be a day, let's just even use, the other day with NVIDIA and DeepSeek and all this stuff, because it's so fresh. Like, for people who bought NVIDIA and then sold out, no one knew that the news of DeepSeek was going to break, when it did. And then all of a sudden, NVIDIA was going to take such a hit and the market panicked. And I just think it's important to realize, like, even when it comes to investors or creators selling out of positions, you can't copy someone's portfolio. You can never do that successfully because you're never going to be there on the click of the mouse when you're hitting buy or the click of the mouse when someone's hitting sell. The only thing you're going to know is maybe why they bought it, but you don't even know their real level of conviction. Like, I came out and said I bought NVIDIA and it's a swing trade, right? But none of you are going to be here with me on the day-to-day when I'm analyzing and looking and watching the stock and and things are evolving and changing every single day. So it just goes back to what you shared, the cliche, like, do your own research and really understand your investments instead of copying. Because I think for a whole 2-3 years on YouTube, I was like J&J, 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 and I'm still here saying J&J. Only J&J's not in my portfolio anymore. It's in Ryne's. So it's almost like I just sold you my J&J.
Yeah, thank you, man.
You're welcome. Enjoy it. I think J&J is a phenomenal company. But if you were to watch all my videos and even our discussions or whatever throughout the years, like, you would have been like, oh, Ari's like diehard J&J. He's going to be in it forever. And then the day came when I was in that dog park and I was like, I'm going to get rid of J&J. No one was there with me but me. And I guess you, because I WhatsApp messaged you. And I WhatsApp messaged a couple other people after you to even like just have them hear my thought processes out. Anyways, what I'm getting at is whether or not we buy or sell, that doesn't even mean the company's a good or bad company. It just means it's no longer aligned with what we need it to do for our personal wealth building.
Yeah.
J&J or WP Carey, let's use that one. It could be a phenomenal investment for someone maybe who doesn't want all the volatility, isn't really looking for share price appreciation at the levels you may be seeking it right now. They may just need that income, and that might be the perfect stock for them. So, yeah. I mean, I had an investor on Masters of the Market, and man, Peanut is really
Dude,
in this one.
Making his rounds today.
Yeah. I had an investor on Masters of the Market, and he was like, I love listening to you and Ryne. I don't invest like you guys, but I love listening to you guys because you guys give me a lot of insights and just like perspectives on how to think about things. And that meant everything, especially the fact that he said, like, I don't invest in individual stocks and I don't invest at all like you guys. But that's what we're here for, is just to provide perhaps another perspective.
Yeah, spot on, dude. And we got a comment on our last video. It was a good comment saying something like, and I think we've gotten similar ones from in other videos too. Um, Basically saying like, you want me to invest like you, I want you to invest like me, or something like that. But I truth be told, I don't see it that way at all. I think that our strategies are more, and our approach to investing is more alike than it is different. And I think one of the big things that does lead to the differences between us is our time horizon is number one. Like I found out last conversation or two conversations ago, you still got another probably 30 plus years in you before you're looking to even start using your investments. I'm like, I'll start using them in the next 10, 15 years if I can, if it makes sense for me. Not all of them, but some of them. And so I just think that goes to show that even though we are pretty much the same age and have a very similar, we're similar in a lot of ways, we still, like, our investor profiles do have some differences between them. And that's what leads to this discrepancy in how we approach structuring our portfolios. You're more concentrated. I'm less concentrated. You pretty much all dividend growth, and I have some of those, but also some slow growers and high yielders. So I'm a bit more differentiated in that regard too. But at the end of the day, like I think that we're, especially how we approach looking at businesses, I think that we are very, very, very similar in that regard. You know what I'm saying?
Oh, 100%. And look, the comment that you mentioned, it was a good comment. And, I'll say that I may joke with Ryne sometimes about getting his hands on growth.
Yeah, yeah.
But by no means am I ever trying to change anybody to mold them into the investor that I am. Actually, the exact opposite. I don't want that. I might challenge people. And I think,
which is good, right? Like
yeah,
that forces
healthy.
That forces us to reinforce our own positions and really understand why we do things the way we do. So that's one of the big reasons these conversations are so helpful. Sorry to cut you off.
So I was going to say, no, that's exactly it. It's like, it's healthy when someone pushes you to actually think about what you're doing, why you're doing it, why you're not doing something that the other person might be doing. Like, I jump on with a lot of these guys from Wall Street from time to time on Masters, and you better believe that a lot of them have changed my opinion on what I'm doing, both off and on camera. Like, I'm not sitting here just one day, I'm a dividend investor, invested into high yield dividend stocks, and then take two, I'm 180 and just investing into, NVIDIA or whatever. The whole point is what I'm doing off screen is important. That's 100x more important from what people hear and see on camera. Ryne's same thing. It's like, yeah, okay, you're on camera right now and we're talking, and you're talking about, WP Carey and J&J. But then, just before, earlier today, you were going through the Starbucks earnings call, right? And it's just important to understand that, like, we're doing things off camera that nobody else sees. We're talking to people and having conversations that nobody else hears. It's shaping us and changing our perspective. And then by the time you see us the next time on camera, we're different investors. We're already different investors. So it's such a gift, I feel like, to be able to have, for me, a Ryne Williams in my life, to jump on camera and even off camera and have him challenge me sometimes, or, get his framework on things. Because if not him, and if not anybody else, I couldn't tell you that I would have seen the success that I've been experiencing, this year, last year. Who knows where I would be? But it really takes a village of, I want to say, investors around you to help you grow and remold perspectives over time, because your investor profile is ever evolving. Every day you get older, your investor profile should be visited.
Yeah, absolutely, man. And I appreciate the kind words. I feel the same exact way. And if nothing else, like I think it teaches us to not be too dogmatic about what we're doing, which is good. As an investor, it's easy to, especially if you've had some success, it's easy to get like have some overconfidence in what you're doing. So it's good to have people who can constantly question you and offer a different perspective. I think it helps keep an open mind, and in some ways can also humble you sometimes too. So I think it's important to have that.
Look, I'll say this. When I push you on growth and you push back with like, no, I'm good. The first thought that always comes to mind for me is like, wait, Ari, like maybe you should pump the brakes, right? Maybe you should think a little bit more on it. And I do, because Ryne is so steadfast in his strategy and what he's doing. So again, I mean, it's so healthy just to have the ability to talk it out and get that pushback,
Yeah,
or see how you're moving.
And I'm glad you brought that up, Ari, because I've been meaning to tell you, man. I think you've been doing a little too good in your portfolio lately, and I think you really need to dial it back on the growth, because it's growing too fast.
Yeah, I honestly, this past week when I hit 250, I was like, man, it's January. Like I said, my goal is 300 by the end of
Yeah.
the year. And I don't want to, I'm going to like knock on wood, like I don't want anything to happen in my portfolio now, because I'm on that upward trajectory, and then take two, everybody sees me in December. I'm at like 150, guy went all in on NVIDIA, but
even so, that would be just a small blip in an otherwise long and successful investing journey.
Yeah, hopefully.
If that were the case, yeah.
But look, at the end of the day, I think that it's important to do exactly what I'm doing. I mean, like, that's how I'm investing. I've been seeing the success. If you're seeing success, don't stop. But don't be foolish and think that at any given second, if you're not being cautious and taking the correct I want to say the correct, maybe proactive measures to the best that you can to avoid the downfalls. Like, I'm not investing in penny stocks, right? Like that's something I'll never do, penny stocks. We're talking about, big players in across industries. Even looking at that perspective, right? There's a net of safety I feel there. Now, if I were throwing all my money into, whatever penny stock that was like a new AI penny stock, that's a different story. I even look at one of Charlie Munger's last big investments was with Alibaba, and look how that played out for him. I mean, he lost a ton of money, and okay, he moved on. He made an investment call. He put the money in, and what can you do? That's investing. But the key to it, I think, that's neat, is you don't need to bat 100% of the time. You just need to have the 1 or 2, 3 home runs throughout your career.
Yeah, absolutely. And those should more than make up for all of the losses. So at least that's the goal. That's typically how it goes.
Look, I really admire. I was gonna say, I really admire, the approach that you have, and you're just, even when you said it today, you're like, man, I just hit 90,000, and the excitement comes on for you, but at the same time, you're like, I'm just sticking to this process and strategy. That's it, and it's something really respectable. The strategy works for you. You're sticking with your strategy, and it will continue to work for you. And that's the level of prudence that I'm even talking about, is like, know who you are as an investor and how you're investing. And as long as it's working, it's working.
Yeah. Well, thanks, man. I really appreciate that. I do feel like, at least for now, I'm settled into a strategy and a way of looking at companies that is working for me. That may change over time. I may feel differently, but for now, I feel really good about where I'm at with the portfolio and how I'm looking at things. And just, same as always, I'm just continuing to try try and learn a lot. And I think reading and writing and doing that, making that a very important part of the process, has been a big game changer for me. And so, yeah, I just want to stay on this path because it feels good, and hopefully, the dollar amount will reflect that over time. But yeah, man, it just feels good to have kind of a more defined process. I feel like the first couple of years at least that I was investing, it was just floundering. It's really taken a long time, and I think this is true probably with a lot of investors. I think it takes a lot of time to really settle into your own as an investor. When you start out, you look at the people on YouTube, or on podcasts or whatever, you tend to model what other people are doing, and I think that that's kind of the natural place to start. But then you really have to make an effort to just learn more about how all of this stuff works, and also pair that with your own experiences in the market. And I think over time that will lead you to establishing your own style. Actually, like, YouTube's a really good analogy because it's the same way. When you first start a YouTube channel, you don't really know exactly what to do, so you just do what some of the bigger creators seem to be doing. And then over time, you come to develop your own style of, scripting and having a presence on camera and editing and thumbnail design. You'll eventually come into your own and develop your own style. It takes some time to get there, but I think that same exact process plays out in investing, and I'm kind of experiencing that. And it's really only been this last year, maybe a couple years now, that I've felt like I've started to hone in on that. You know what I mean?
Sure. It's this evolving journey. If you told me, a
Yeah.
year and a half, 2 years ago, that my portfolio would be where it is today, I'd be like, I don't know. I definitely, I definitely wouldn't think that I would actually have under 10 holdings, and I would be focused really on with a heavy G, dividend growth stocks. But again, as I evolved, it only made sense for me. And now that not only does it make sense for me today, but now that I'm seeing success in my strategy, that's what keeps me going. But again, you got to back up and say, you're not with me every day. Like, you don't know what I'm doing on the day-to-day, who I'm speaking with, how my perspective is evolving and changing. Or you don't know, what Ryne's doing and who he's talking to and what he's learning and how he's remolding this perspective. I think that's so important. Even the more I say it, it makes more sense to me to just get your process in place. If you're not seeing the success that you want, then and only then I think you should start to think about changing your strategy. But that also comes only after a slew of questions like, well, why did I pick this strategy in the first place? What were my expectations? Then you can even go into the means of saying, are other investors who have or a similar strategy seeing success? Maybe it's what I'm doing or not doing that's making my strategy inefficient for me. So I have investors in my court who, like, just to bring up Shaw again, right? The hedge fund manager. I can ping him and just be like, hey, what do you think? And to have this quick access to certain people sometimes I just think is magnificent, because that's how I'm shaping my perspective, on a lot of stocks. And when I don't have all the answers, because I don't have all the answers, I just try to go to the places where I can find them.
Yeah. Where are those places? Is it just kind of like you said, reaching out to people in your network? Is it reading things? What's kind of like your go-to with that stuff?
So the first and foremost, I've stopped watching all YouTube videos. And you might be able to attest to this, but even just from the creator sense, like, I don't want to see what other creators are doing, because I don't want to be copying anything. Just for the sake of like, oh, I saw this on this channel, so I'm just going to copy it and use it here too. I'd rather give everybody something authentic. But also in that, like, I stray away from any investors dishing out, recommendations or advice. And for the sole reason being, I want to have my head on the swivel when it comes to macro events and news and companies, what they're doing. And then I start to ask myself what I'm interested in, what I'm most interested in, what I like to own. And then I start to read more about the industry or more about the business. And only after, when it's coming to these ideas or even shifts in perspective, I will approach other people. But the first and most important thing for me, I have multiple notebooks over here. I'm such an old school guy, pen in hand. I write, and I will actually sit down right here and think, something I don't think a lot of people are even doing these days enough of. Like, sit down, breathe, write it out. Or like just put your thoughts on paper. Like, what is actually going on in your mind instead of this dopamine-like reaction to the market? I just sit down and I'm like, before I actually hit buy or sell, let me sleep on it. Let me think about it. And then after I think about it and develop my own thesis on something, then I'll start reaching out to certain individuals who I know are experts, quote unquote experts, or at least know more than I do in that certain field, or when it pertains to that business. Then I'll reach out to them. And I never ask the silly question of, should I invest in this company? Right? Like, that's a silly question. The real question is asking something about the company, right? Or the unanswered questions that you have that you need answered. Can that person answer them? Right? Like, what's going on with their management team? Or do you know if X, Y, or Z? I'd love to get your opinion on, the state of affairs with this particular company. And just kind of leave that open-ended for them to fill in their thought process on, whatever's going on. Now you can take that in and just say thank you. That's it. Thank you. Appreciate that. Take that in, sit on that. Try to see if you can challenge your own perspective. That's really what I do a lot of the time. When it came to NVIDIA, I mean, this is a great example. Again, I work in the industry. I talk to a lot of people who are very, very well learned in quantum computing and AI. They've dedicated like their research just to this field. So I'm sitting here and I'm saying, well, DeepSeek just comes out of left field. NVIDIA flops. And I'm saying to myself, the first thing I said to myself, well, this is emotional investing. And I know that from years of investing. Is this sell-off something to actually be concerned about, or is this an opportunity? That was question number 2. Question number 3 says, do you know enough about NVIDIA, or can you learn enough about NVIDIA to then pull a trigger on it? And it just so happens, I got a bunch of people in my back pocket that I can immediately reach out to all about NVIDIA, DeepSeek, and all, so of course I did that. I used that to my advantage. And I think that's just so important. Like, use everything and anything you can.
You just texted Jensen real quick and said, "Hey, should I buy?"
Yeah, I just said, "Hey, man, like, give me the DL on what's going on over there."
Yeah.
No, look, if you don't think that Buffett, like, just by the way, I finished The Snowball. That book is done. It's
Nice,
on the
man.
shelf,
Good job.
baby. Finally. But as I was finishing up that book, one of the thoughts I actually had was Buffett was constantly talking to people. If you're a good investor, you're a good networker. You're a good student. Like, being a good investor is not just about throwing money in the market. It's being a good student of life. Who was it? Jamie Dimon. I just watched a video with Jamie Dimon was saying, like, basically his morning routine. Guy wakes up at like 4:30, 5 o'clock and reads 7 or 8 newspapers from front to back. And then there was a caption above this video. It was on LinkedIn. I saw this. And the caption read something along the lines of, everybody's going to self-help, for leadership advice, but leaders are going to learn, and it was like, oh, that's so good. Like, how many people out there are hyping themselves up with the wrong content? Like, do you really need to go watch a video on, whatever GameStop type of stock where someone's like, it's going to, the next big thing, it's going to explode? Or should you be watching a video on macroeconomics or what's going on geopolitically or what the Trump policies really mean for businesses? That's what the leaders are doing in every single industry. Even Jensen, I mean, all of them, they're all reading up on what's going on. They're students of life. They're students of history. They're students, period. And before you're an investor, I mean, you're a student. You should be.
Yeah, absolutely, man. Especially considering, number one, this is an infinite game. You can do this for the rest of your life, and there's always something new to learn. But number two, because the things that you learn in investing have applications outside of investing, and vice versa. The things that you learn outside of investing, you can apply to investing. That's pretty much the premise of the book, Investing: The Last Liberal Art. There's all these different mental models, which Charlie Munger was like the OG proponent of the mental models. That was his whole shtick. Is there's these big ideas from various subjects like physics and biology and literature and you name it, poetry even. There's all these big ideas that you can apply to investing and also apply to other areas of your life too. So it's just all interesting how it's very interesting how it's interconnected, especially when you get into topics like human psychology and human behavior. And it's kind of funny, you mentioned when you were talking about NVIDIA, you said that pretty much like right off the bat, you knew this was emotional investing. And the only reason you knew that was because of just years of being in the market now. And it's funny because we always hear about like just signal versus noise. What should you pay attention to? What shouldn't? Which things causing share price drops are just short-term noise versus like things actually wrong with the business. It's funny that you can get a sense for that, or kind of I guess a sense. It's funny that you get like a sixth sense for that from just having experience, and that only comes with experience. Like only from going through it so many times can you get a gauge on, oh yeah, that's just like, it's a reflex. Oh yeah, that's just clearly people are overreacting. Oh yeah, you just know right off the bat, and it's kind of cool once it gets to that point. And when you can kind of tune into that and realize it's happening, it's funny to realize how often it happens with so many different stocks. Like on a daily basis, it happens with some stock or another.
It's crazy. I mean, to go back for a second, and you can't be a day trader and get that feeling. Like you'll get a different type of feeling, because day traders are constantly going, like, you're in the game. As an investor, someone who's just kind of like the backseat approach, but still has like the view of the road in front of them, you're like, oh, like this is the full picture. I think that's so important because you need to be calm. Like you need to be a sniper, not with a shotgun, like just wait and watch and observe. And I also think to that end, like you know this from just being an avid reader, you need to be growing outside of just the stock market, and like if you're growing outside of the stock market, you will grow in the stock market. And I think I wish my dog did not eat my book, Richer, Wiser, Happier. But there's one of the investors in the very beginning, I think it's like the second or third, I forgot who it was. They spoke about like championing the arts and being like very involved in like the world of the arts and just like a historian, and how much that played a role in their investing career.
it was some French guy. I don't remember his name, but I just read that part
Yeah.
not too long ago. Some French guy,
Yeah, yeah. And he a huge like art
big
collector
art
and just
collector.
like and
Hmm.
it made me think because I was like, wow, like this and he was a history buff and he's like, here's one of the wealthiest, fund managers or again, I'm forgetting who he is. Um but one of the wealthiest, top of his game and he's not sitting here saying get in the market, be a day trader, have, like be all in. No, he's like, invested into history, understand history, like zoom out. It's so important to have a life. Even if you're reading books on psychology, you will become a better investor, hands down.
Dude, yeah. I think that's honestly one of the most important subjects you can study. And that's why I'd recommend books like Thinking Fast and Slow by Daniel Kahneman, Thinking in Bets by Annie Duke. Um, what else? There's another one that I think I'm missing. I don't know. Start with those two though. That's why I think those are such good books to read because it teaches you a lot about the human behaviors that play into this. And I will say to your point, like learning about this and kind of going back to our earlier conversation about open mindedness, but um, learning about how that stuff plays a role in how stocks move has made me have, I don't know if an appreciation is the right word, but certainly an understanding of why people become momentum traders. Because I do think that there is I do think there's something to that. If you are trying to react to and invest against human emotion, I definitely think that can. Um, what in the
You
world?
are. I was like, I thought it was me, man.
How does okay? So how does it work from here? Does this go with our other recording, or is this separate?
Yeah, it's still we're still going. We're still recording.
Oh, okay. Thank goodness. Sorry about that. I do not know what happened there. But anyway, and this might be a good place to close the episode after this, but what I was saying was it really helped me understand like a different type of investing outside of what I do. I can certainly see why people um, can invest based on momentum because I do think there is some merit to that because human behavior is one of those things that doesn't change and we see it played out all the time on repeat in the stock market.
Oh, 100%. I think there's validity behind any strategy that's out there as long as it's well thought out. And again, you know what you're doing and you're reaping the success and it's not just some shotgun approach to investing, which is not even investing. I'm not going to call it investing. You're just doing something. You're like a monkey on a gun, just clicking buy and sell. An investor has a strategy and process. They stick to it. They follow it. They know why and what and when and how to the best that they can. But like again, that book, Richer, Wiser, Happier, such a great read. Um, just go read. Just read. Like, sometimes I get on Masters of the Market, people comment, "Oh, this is an hour. I'm out." And I'm like, what are you doing in your life? Like I'm sorry. I just think we've lost the ability to sit and think and because of that, what we're seeing is wealth just go right down the drain for most people because we're doing less and less thinking. We're acting immediately. Instantaneous gratification is what we're after. And that's just not how the world works. That's just not how the game of life works. And anybody who makes it appear that way, which is also super interesting, I'm sure you can attest, Ryne, as a fellow creator. Anybody who makes it appear as if it's get rich by Tuesday lifestyle, they're either broke or they earn their wealth in some other means, but they're making it appear like they were successful somewhere else. And I've seen that a few times. And I'm like, oh, so you're not, your true wealth came from real estate and not the stock market. But now you've started a YouTube channel on investing, right? Like you just have to know someone's full story, which again, then it makes it a little scarier because how do you really know someone? on the internet without knowing who they really are, et cetera, et cetera. But either way, I mean, just read. I mean, just be a student of life. That's all I got.
Yeah. That's a great way to close this out, I think, man. That's all we are at the end of the day. We're just applying it in this direction.
Students of life, and hopefully we graduate with honors.
Yeah.
My first degree from the University of Hard Knocks. We'll see where I'm at next.
Well, man, I would say 30 years old, 250K invested, certain amount in the bank on top of that. I think you're doing pretty good. You're off to a good start.
Let's go.
Yeah.
You wanna close this out?
I kicked it off. Why don't you close this out?
I'll close this out.
You
close
got
this
it.
out the right way. I'm gonna close this out just by saying this. I'm gonna leave a strong message.
Uh-oh.
Yeah, I don't know what was in this coffee tonight, but I just felt the energy. No, look, investors, first of all, thank you as always for joining us for another deep end chat here. It is always the biggest honor and privilege, I think, on both of our weeks to be able to be here in chat, in front of you all, for you all. Hopefully we've dropped some dimes of wisdom for you to take into your weeks and have shifted your perspectives, even if it's just in the slightest. But really become the student of life so you can become a better investor. And until the next deep end chat, both Ryne and I are looking forward to seeing you all there.